Good evening. We have Mr. Anil Gambhir, Chief Financial Officer at Blue Dart. Thank you very much, sir, for PhillipCapital Groundview Conference. And
pleasure meeting you.
Blue Dart is one company where we have seen very strong improvement in profitability during very challenging time of COVID. So, can you tell us more about Blue Dart's how you are able to perform much better, and what are the growth outlooks going out for different businesses of Blue Dart?
Sure, thank you for having me with you. As far as better performance is concerned, I think we have been working for improving our performance since 2018, and I take you back to year 2018. That's where we had done geographical expansion. Though it was expected to have a short-term impact on our bottom line, because obviously it required investment in more than capex into opex, which becomes upfront cost for us. Be it expansion into tier 2, tier 3 cities or tier 4 cities. That's where we needed to hire facilities, manpower. We needed to hire vehicles for network, physical network, and also expand our capacity from system point of view manifold. Because as you recall, we had about 700 facilities. From there we moved in a year's time more than 2000 facilities. That's point number one, the kind of expansion which we had. Secondly, to connect all these offices, we needed to have network and virtual network, which is upgrading our central system as well as providing system at each of the office. So all that had impacted more on operating side. And so that's where the effort which we put in generally has a 18 to 24 month kind of break even. While that was happening, we also gave a look to our existing businesses which were not making profit. So we did close down our EFCs which were making losses for last 4-5 years. That was one part. Another part was because of automation and digitalization, a number of roles had become redundant. So we had carried out right sizing exercise in 19. So all this put together were the efforts to make organization much more profitable. But unfortunately, by the time we could realize the benefit, we got into COVID period. So as you know that from mid of March our country got impacted, and there was lockdown and which carried on till about say June 2020, mid of June 2020, and that's where you could not see the gradual impact of the changes which were done. And the moment we were out of first wave of COVID, you started seeing much better performance. Actually, it was accumulated over a period of time, which would have been seen during this period, but because of these events, probably we could not see. And then post pandemic, you started seeing better profitability, better growth on top line. Obviously, we also worked on number of initiatives to improve our margin, which was cost efficiency improvement, be it manpower productivity, be it the way we use our network, physical network on ground, and also we innovated the way we were loading our aircrafts, which gave us additional 5 to 7% capacity. So all this put together, you started seeing it post first quarter of wave 1 pandemic, and that's where you saw that good top line growth and better margin, and this all accumulated together. You started seeing in that period. Having had this run till now, I think from future point of view, the outlook point of view, currently if you see GDP side, I think there's a very positive outlook compared to previous 4-5 years when GDP has been going down from 8%, it came down to 4.5%, and during pandemic it went down to negative level as well. So now the outlook is about 7-8%, 9% kind of GDP growth, coupled with various government initiatives, be it on the policy front, where especially logistics, there's a lot of focus. National logistic policy is being announced. There's e-commerce policy. There's a lot of focus on infrastructure development. And before I move to infrastructure, let me talk about the government giving logistic as an industry status. So obviously the enablement of that in terms of facilities would happen over a period of time. Now let me turn back to the infrastructure development which is happening. You know, kind of development which is happening, be it on roadside, be it dedicated freight corridor, be it rail corridor, and also waterways. So all this augurs well the development and the capex which is happening. As you know that government spends 1 rupee. The general belief is there's almost 4 times of that. There's a public participation which invests in that. So if that investment government is doing, obviously the cascading effect of that on a private side would happen much more. So we believe with the government initiatives on the infrastructure development and also various incentives given on the Make in India program, be it PLI scheme, or be it China Plus Fund, or be it the 5 trillion economy which gives impetus for a faster growth. So I think all this augurs well for our kind of industry, where we will get we are positive about it, that it will have a positive impact on us. And unless something new geopolitical situation comes, or a pandemic becomes very very disturbing or disruptive, I think future we are quite bullish on that.
Okay, great. And can you tell more about how competitive scenario has changed post COVID, and we have also seen a significant increase in the cost pressure, particularly fuel as well as other costs. So how the Blue Dart is differentiating or trying to face these challenges to maintain profitability and overall outlook on the profitability, if you can highlight.
So you raised 2 topics. One is competition, other one is the inflationary cost which are increasing. So let me deal one by one. First, let me deal with the competition side. I think Blue Dart's philosophy has been doing business profitably. And when I talk about profitably, doing business, what I mean is whatever decision we take customer as a center of our decision making. So anything decision we'll take or any action we'll take, we'll make sure that it should either improve customer delight or customer experience, and that's where we are focused on. So we make sure that any investment which we do should lead to better service quality through passionate Blue Darters, including the motivated people who go and service customers, because ours is more of a personalized touch kind of a service. So we ensure that we have a good, well groomed, passionate Blue Darters to go and deliver better customer experience with the value-added services. Through even they carry digital equipment to deliver that service, and which enables them to take certain decisions being in the field, because those kind of details would be available, including SOPs on the equipment. Having said that, this is what is our philosophy, but competition is more towards volume business. They have been trying to get volume by undercutting the price. And that's where volume gives them top line and top line gives them valuation. So they are more into valuation game versus value which Blue Dart is generating. So we don't compare ourselves. In fact, I would say it will be unfair comparison, because we deal in customer experience, they deal in top line growth and the valuation. These are 2 different trajectories. So we leave it to them the way they want to handle it, but Blue Dart would continue to remain in premium space by adding value and by improving customer experience. That's where it is. While they may cut down price and get volume, but unless until that is sustainable business for them, it will be difficult, very challenging for them to survive. That's one part. Coming to the inflationary thing, you are mentioning about crude prices increasing and also interest rate increasing or foreign exchange going up. All this does have an impact on a business activity, on economy as well as business activity. But as you know that we have been in this business for quite a long time, and we have been handling this issue. So as far as crude prices are concerned, we have a fuel surcharge mechanism which is well tested for over 20 years now. So that protects us any kind of fluctuation in the fuel prices. So we have this transparent mechanism which is well settled, and if there's a fuel price goes down, customers get billed lower fuel surcharge. If fuel price go up, we bill them higher price. So there's a natural hedge available which does not impact our margin. For general inflation, we have been last 3-4 years in an organized way taking price hikes from customers. So as you know that effective 1st January every year we have been announcing 9.6% price hike. So we have been enforcing that, and we have been successful. Customers have appreciated, because looking at the inflationary scenario in country, they do feel that probably it's it's justified to neutralize the impact of inflation, and that's why we have been successful to maintain our margin. On the foreign exchange impact side, I think there also last 6-7 years we have introduced a KF, which is currency adjustment factor, which again takes care of fluctuation in foreign exchange, and we pass on that fluctuation to the customer. So this provides natural hedge and does not impact margin. Having said that, our efforts on the cost efficiency and also being a fixed cost model, if we have a higher volume growth, that gives us operating leverage, and through which we have been improving our bottom line.
Got it. I think just to coming to the growth, what kind of growth outlook do you see for surface business and air business, and to support that growth, what kind of capacity addition you are looking for network as well as in fleet? You can give us the feedback on that.
So as far as growth outlook is concerned, I think we have been seeing good growth with the improvement in road infrastructure on the road side, and it has been very healthy double-digit growth. And we expect with the the kind of levers which we spoke about, be it manufacturing, one is policy, second is infrastructure development, three the incentives given by the government for manufacturing. So this would continue to give good push for volume growth on ground. That will be one of the largest growing, or rather one of the high growth sector. To add to that, I think we are going to see or we are already seeing impact of formalization of economy. So hitherto what was operating in informal sector has started moving to formal sector, thanks to government and initiative on GST and the tax evasion, the data analytics which government is doing on the back end, which is leading to higher level of compliance. As a result, GST is also collection is improving, which we know from media reports, and also helping formal players like us to have better growth on top line. So that is enabling high growth on ground side. Similarly, there is a lot of headroom available on e-commerce side. Currently also it is growing very high double digit, and we expect it to grow, continue to grow at least for some more years in the similar fashion. Because if you benchmark developed countries, it's about 15% of the retail spending is on the e-commerce or online kind of shopping which people do. If you come back to India, we are still about 3.5-4% kind of range, which has got a lot of headroom available for online or e-commerce growth. So we expect that's why we expect this growth to continue for for some more time in the high growth area. So both these products or rather our service offerings will continue to grow much faster as compared to air. Air generally is slow growth in India because of one the kind of geography we have. When I say geography, meaning there are some production centers, some of them are consumption center. So obviously you get one-way load and you don't get two-way load. So sometimes it creates a problem, and that's why some of the items move through road. So and as a result, the growth percentage compared to air and e-commerce is relatively lower. Currently it is in the double digit, low double digit kind of growth. We expect either to continue at the same level or maybe drop to high single digit kind of a growth on an air side. That's where we expect at least 3 to 5 year or mid-term kind of a growth to continue on express side.
Yeah, just I think conclude capacity expansion or network expansion to support this kind of growth.
Sure. So looking at current dynamics on economy side, we already have a very high capacity utilization on our air, and we are looking at expanding that. Very soon you will get to hear about it. Currently we are working on what kind of capacity and when to add. So we will talk about it soon. when we finalize our plan, because we need to take into account the new infrastructure which is coming up, be it dedicated corridor, both railway and road, and also the newer avenues like waterways, somewhere it is opening. So all those we needed to take into account before we finalize our plan. So we'll we'll talk about it soon on air capacity side. Similarly, on ground side, though we operate on asset light model, so hiring of truck is not an issue for network side, and even for last mile and first mile side. Generally it will require investment in bigger warehouses, which is again on asset light model. We will have a long term lease for a bigger facilities. Yes, we will need to invest in equipment, infrastructure, handling of shipment, that kind of infrastructure we need to build in, or maybe manpower we need to build in. So even that is also currently on the drawing board to address that. So currently with both sides seeing high capacity utilization, we needed to invest in both air and ground capabilities, and which currently we are reviewing, and very soon you will get to hear about it.
Got it. And thank you very much, sir, for being at PhillipCapital conference, and it was a really pleasure to listen to your views. Thank you very much. Yeah.
Pleasure talking to you. Thank you.
Welcome to PhillipCapital Groundview Conference 2022. My name is Vineet Bhatnagar, and I have a pleasure in welcoming all of you to this conference. This conference has been organized after a long gap of 2 years. The world has come through a challenging time, but we are delighted that this in-person conference is being supported by 76 corporates and more than 200 institutional investors and clients. We are also very happy that the participation has been very broad-based. Companies from various industry segments have participated, and there is no substitute to an in-person interaction. That has become evident and very clear. We will remain committed to doing such conferences and bringing value addition to our clients through such interaction from the ground. Please look out for our next thematic conference under the same umbrella of Groundview Conference of PhillipCapital. Welcome to PhillipCapital Conference once again, and thank you for participating.